my weirdest pair of the year. Aussie Canada 1 hour double top, but now looks like a high and tight flag. How to differentiate? Good question. This is a great example of what is called a morphing pattern. So, at one point, this was a double top. Would 100 out of 100 traders agree? Maybe I should scroll down so I can see what you're answering. All right, yeah, so double top, yes. Double top, nice double top, 100 out of 100 traders would agree. And then we fail to extend down and we come back up. And we have two things. It could be a triple top or a high and tight flag. How to differentiate? They're the same thing. So it was a double top that is turning into a high and tight flag. So it is simply one pattern that morphed into another pattern. As will sometimes happen in the market. You see that with advanced patterns as well sometimes, where it's like, oh, it's a bat, and then it turned into a Gartley. Or yeah. So yeah, it is one that turned into the other. Now let's see bigger picture. What are we doing with Aussie Canada? IPDE this bad boy. What are we doing here? Are we breaking? I know it's hard to see, but we're breaking and closing above structure, right? Now, do keep in mind, sorry, if we go all the way back, our next level of outside structure is going to be right here, right? So we're not quite in the middle of no man's land. That's going to be important to understand, right? Why that's important to understand is because of this. If we looked at this as a high and tight flag, remember I told you about structure? If we look at this as a high and tight flag, if this is a level of structure right here, and my high and tight flag looks like this, what is the story that this high and tight flag, excuse me, dying. What is the story of this high and tight flag? So first and foremost, if we, let's IPDE this thing, right? First of all, if we identify a break and close above structure, ooh, that's a horrible drawing. What does that allow us to predict? Allows us to predict a bullish move up. I'm not drunk, guys. I just can't draw straight today. Right? Now, a high and tight flag, this actual pattern formation, what does that actual pattern formation mean? So yeah, a high and tight flag is a bullish breakout pattern. So this is, you know how we always talk about lining up the what and the where? So in this situation, the where is giving us a bullish bias, right? That's the general analysis of the chart. The what, which is the actual pattern formation, is giving us a bullish bias. You see how these two things are aligned? Woo! Right? Boom, that's a perfect trading opportunity. Our overall prediction and the actual pattern, the macro and the micro, are pointing us in the same direction. Now, in this situation, it's a little bit different, but kind of not really. In this situation, right, we had the previous level of structure right here, right? But do you guys remember what that upper black line is? That was also structure. So, did we break and close above structure? Well, yeah, we did at first, but then we're holding at another level of structure. So going back to our where, we don't have a bullish bias yet, despite us still having the bullish bias from our what? Do you see the difference between these two scenarios? One is a grade A trading opportunity where it's like, wow, price action says bullish, pattern formation says bullish, let's go. The other one is like, hey, pattern formation says bullish, but overall price action says, oh man. But, there's a cool thing about this, right? We know that there are three ways to trade flag patterns. Who remembers, or any type of breakout? What are the three ways? What are the three ways? Who can tell me? Who's been with me for entirely too long? Who's ever seen a YouTube video? Here we go. There's the before, the during, and the after. So The before would be positioning yourself down here, right? Like on this higher high, higher close candle right there for the breakout. You're getting involved at the very bottom, right? Saying that, hey, I'm anticipating this breakout is going to happen. Right? You're paddling out in the ocean before that wave comes because you're anticipating you catching that wave for you surfers out there. Right? Now, in a scenario like this where you have the double bullish bias, do you think it's a good idea to be a little bit more risky? Or not saying do you like you have to, but could it be a good idea to be a little bit more risky in the situation where you've broken structure and you have the flag pattern? Yeah. Because your analysis is telling you that, hey, we've broken structure, we should continue higher. So you can do the before. The dooring is like a buy stop up here, right? Above the breakout, and as it breaks out, or if it breaks out, you get filled. Then the after is the pullback, right? So the dooring is going to be personal preference anyway if you're a kind of a breakout trader. Now, you probably shouldn't do the before because we haven't cleared structure, so we have no reason to believe that price is going to go higher. But think about the after real quick, right? So here's the high of the flag. The after requires a confirmed break or confirmed violation. So we would need to violate this level. In violating the highs of our flag pattern, what else do we violate? Some of you are starting to see it. You're starting to see it. It also violates our higher level of structure. So boom, if we get that violation, we can erase the X from our bull person over here because now as we go back and we do our IPDE, we can identify a break and close, a violation of structure. That allows us to predict a bullish bias. We still have our bullish pattern. We're still good to go. Wait for our pullback, or if you're a breakout trader, you can trade it right here. That would work as well. So if you're a breakout trader, you can trade it right after the confirmed violation and trade it higher. Or if you're a pullback trader, wait for that pullback and your opportunity to get long. So I think it's a cool situation because even though it's stuck between a rock and a hard place, and this is the predictive in our analysis, reactive in our execution type of deal, we don't have to automatically like just rip up and throw this trade away. We don't have to be like, whatever, it's a stupid structure, can't trade it. We just have to wait for confirmation. And maybe you weren't able to get involved in the most aggressive way, but you should have a plan B. Maybe even a plan C for how to get involved in trades. So this one would work perfectly. Then the question is, right, where can we go next, right? We scrolled back on the higher time frame. I don't know where back in the day, right? Wherever the day was, right? Next question is where can we go next if we go higher? When was this? Back in 2021. What was I doing in 2021? Recovering from COVID. Yeah, I forgot about that thing. You're probably looking at least $98.30s. At least $98.30s probably being an area in which you would predict price to go to. I've noted where we're actually at right here. $98.30s. So you do got some room. The one thing I would say, no, we do have that into account, do we? Okay, yeah, I was gonna say I would take the psychological number into account, but that we would have to break that to violate our flag pattern. So that's good. Yeah. So yeah, 98.30s. I would say at least 98.30s would be a place you can look for. Muhammad says $1 even. You can shoot for that as well. That's a little up there. I'm not that ambitious with target ones to go to parity, but I'm also a very conservative trader. So, but yeah, if you got that as your analysis, remember we spoke about yesterday, the target level should be based off your technical analysis and your prediction. So if you're technically analyzing the charts and based on your analysis, if your analysis says, hey, this is where I think price is going to go. And it has to say it in that voice. If it doesn't say it in that voice, it doesn't count. Hey, like that, right? Then yeah, that's where you take your money off. That's where you take your money off. All right, cool. Good example on Aussie Canada. Let's go down to a day trading chart real quick. Just take a look at this. Oh, look at that. If again, you shouldn't be someone looking to get involved in advance, but you had a nice little double bottom here you could have used if you were. Probably had a nice 26.18 here. Hey, and know what? On the same time, just from a counter trend trading perspective, we spoke about morphing from the double top to this. Maybe even a cipher. Oh, is that a cipher? Sorry, I'm getting distracted, guys. Hold on. There is a point. I'm seeing things now because my eyes are drawn to see these. Do we have a cipher? Oh, look at that. I promise I'll get back to my point. I'm going to keep saying that so I don't actually forget my point. Yeah, we do. I found you. I found you. Look at that. Hot tamale. X to A to B, B to C, C to D. Boom. How you like that? All right, back to the point, right? We spoke about how this was a morphing pattern. They're everywhere, right? Train your RAS. I meant to put it out this morning, but I'm doing a podcast on training your RAS. I got a question for one of you guys about back testing and not being able to find patterns. So I did a little quick podcast on the RAS and how to train it and whatever like that, and how to basically train your eyes to see patterns or whatnot. And it's like, this is a perfect example of RAS where it's like, oh, this is just like a little complex pullback, a little wiggly and jiggly. Then like you guys, oh no, it's a cipher. I see it, right? Your eyes can just spot these things out. It's very interesting. It's like I didn't use this example in the podcast, but we speak about the RAS and our ability to kind of, it's a filter. It allows us to recognize things. Have you guys ever, this is a classic example, you guys ever like get a new car? Anybody ever get a new car? Right? And what happens the moment you get a new car? You get excited, you got this new car, you're like, oh man, this is awesome. I've never seen anyone with this car, blah, 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 blah. And as soon as you drive it off the lot, what do you notice? Everyone's got it. Everyone's got the same exact car as you. And you're like, what the hell, man? Like, I swear I've never seen anyone with this car a day in my life. But as soon as I get one, everyone else copies me. Well, no, they've been had it. You just didn't care. But now that you have it and it's on your mind, now you actually start to recognize all of these hidden cars that were always there, but you just never actually recognize it. So like the patterns are the same way. Like they're in our face, whether it's this pattern or a flag pattern or a double top, whatever price action pattern you're looking for, they're in our face the entire time. We're just not trained to notice them because they're not important to us. And our brain does a great job of kind of being on energy saving mode where it consistently goes through what we see throughout the day and says, okay, I'm going to only focus on the important stuff and I'm going to throw all the unimportant stuff away. Anyway, back to our morphing pattern thing. Yeah, catch that podcast. It's going to be out later today. Maybe, if I actually have time to do it. But we can still look for a move to the downside, right? Remember, we're still in between structure. So we don't know. We do not know if this is going to break or not. We're being predictive in our analysis. We're saying if we violate to the upside, then we can look for that breakout to 98s or 98.30s or a dollar even. But there's still downside opportunity. If this breaks out to the downside, this is that same double top move you spoke about, right? Yes, we broke out a structure and we did the whole thing up here, but if we break to the downside here, and this is a higher time frame obviously, right? Well, where can price action go next? We got a lot of room. We got a lot of room. Right? So this is a cool opportunity because we've got moves to the upside or the downside. And this is why I love, whether it's a high and tight flag or it's a sideways channel, this is why I love opportunities like this, because I don't really care which way the market goes. I am a reckless mercenary. I can care less if we see Aussie dollar strength or Aussie dollar weakness. I don't really care. I'm just waiting for the market to show me which way it wants to go, and then I'm going to either try to make money on the way up or on the way down. Reckless mercenary.